Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Potentially a little bit of a glitch in the US North Korea talks. South Korean leader is currently in Washington, and there are potentially a little bit of discussion there with President Trump that that meeting between the US and North Korea might just be delayed a little bit. Now, nothing's been official out there, but it's just a little bit of talk that it may just be delayed. Obviously, both sides are sort of gesturing and posturing about what they want to do and what they want to talk about, etc., and potentially trying to get the upper hand and looking like they are sort of driving the meeting. But at the present, it's looking certainly a little bit on sort of shaky ground, should we say. I think the positive things are that both sides want the meeting to take place. I think that there's certainly a lot of benefit out there for North Korea in terms of the sort of sanctions imposed on the country at the moment, and potentially getting those sort of lifted or certainly sort of reduced a little bit. That'd also be good for sort of North Korean trade. But on the sort of flip side as well, Trump doesn't want to seem to be giving in too much, and really is trying to drive the meeting pretty hard. Obviously, as well, the US has pulled out of the Iran nuclear deal, and that potentially has some issues out there as well. And it's just going to be interesting to see how that sort of plays through over the next sort of 3 to 6 months. On the positive side, though, we've seen a sort of putting on hold of the China-US trade tariffs. If you remember, those were sort of announced and sort of tit for tat over the last sort of couple of months, but then sort of delayed and extended a little bit. They've been put on hold now as both parties sort of look to sit down and try and sort of nut out a trade deal. Indeed, been announced this morning that Wilbur Ross, the Trade Secretary, will be heading to China for the sort of next phase of those sort of talks. And again, just going to be interesting. Both parties want to get a deal done. It's obviously beneficial for both economies, but again, it's just a question of sort of sitting down and not appearing to sort of lose face on sort of either side, but still trying to get the sort of best deal, obviously, for your own sort of country and workers. And it's just going to be interesting to see how it plays through. Obviously, I think there's going to be a little bit of give and take on both sides. And it's just a question of one, I suppose, how that is reported and what is sort of seen, and potentially who maybe has to make the most sacrifices. I think certainly the good news is both sides really want to get a deal done. If you look at US markets, certainly a little bit of increased volatility over the last sort of 2 to 3 months. Potentially there was a lot of talk when the 10-year hit 3%, that was going to be pretty negative, would cause a mass sort of sell-off. Certainly we've seen a little bit of selling pressure out there, but overall, again, the market has recovered reasonably well. That's just on the back of some pretty good data coming out of the US. You've still got a pretty robust and strong economy. Also, as well, earnings were pretty good in the first quarter, and it's just going to be interesting to see if that can be sustained in sort of second and third quarter. I don't think anyone expects earnings to be quite as strong in terms of growth-wise going forward over the next sort of 2 to 3 quarters. But again, there's still just a steady sort of momentum on the upside. And at present, the share market really, I don't think, has really taken into consideration just how good those earnings were in the first quarter. Earnings were up in some companies over sort of 10-15%, but yet the share market, in terms of the indices, hasn't really moved. Obviously, with the geopolitical issues, especially in the Middle East, oil is taking a little bit of a spike up. Brent briefly hit 80 bucks. WTI is comfortably above 70, around sort of 72 at present. It's just going to be interesting to see how that sort of plays through. Certainly oil does look to have sort of established a new sort of trading range, which is on WTI is probably sort of 65, 75. On Brent it's probably sort of 75, 85. And obviously if it gets above 80, that has some major implications out there for inflationary expectations. Which is sort of quite ironic really, because central banks have been trying to get a little bit of inflation back into the economies. But potentially if you see a big spike in oil prices, that could just have the the adverse effect and having too much inflation, then interest rates have to go up. Really a pretty fine balancing act with the central banks, and it's just going to be interesting to see how it all plays through. Still no further news on Brexit. Again, the time really is ticking there, the clock's ticking there, and really needs to get a little bit further momentum going forward, and progress negotiations. Presently just seem to be sort of stuck a little bit and sort of stalled. A little bit of sort of toing and froing, but not really making much sort of headway. On the other side, the EU is sort of growing at still a pretty reasonable rate. It's just going to be interesting to see how that sort of plays through in terms of ECB policy. Again, they need to potentially sort of get interest rates back to a more sort of normal level. Obviously, you've got negative interest rates, and it really does need to get sort of sorted out. The US has tried to address the situation with the Fed, in terms of sort of rate increases. And that again is sort of getting market back to a more sort of normal level in terms of interest rates. The ECB is still a long way from that point. On a positive note for New Zealand and Australia, there's talk about negotiating a trade deal with the EU. Obviously, that will be pretty positive, and it's just going to be interesting to see what sort of deal can be struck. Time is running out for KiwiSaver balances. End of the financial year is end of June. You just need to check your balances and make sure you made those enough contributions to get that maximum tax credit. So if you're really unsure on what those numbers are, call us on 0800 867 323. Obviously, in terms of inflationary implications, you would have noticed here in New Zealand, gas prices are getting pretty high, if not sort of highest levels we've seen for really quite some time. And potentially, if you see a little bit of weakness in the New Zealand dollar, they could go even higher. One of the analysts was talking about $3 a litre for unleaded. Currently we're around sort of 230, maybe 240, 250 in some of the regions. So that's again a pretty big increase. And that has major implications out there, say for the inflationary expectations in the economy, but also just for everyday living. Now, if you're looking for income options here in New Zealand, there are plenty of options available, and call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.